Hey traders, welcome to another video brought to you by ZeroToHeroTrader.com, giving you the tools and the confidence to take on the markets in any environment and take your trading from zero to hero. Let's get started.
Hey guys, how's it going? In this video lesson, we're going to be talking about 5 things that every day trader needs to know. Number 1, anything can happen. So let's talk about Black Monday. If you guys ever heard of Black Monday, it refers to October 19th, 1987, when the Dow Jones Industrial Average dropped 22.6% in one day. Right? A really bad day in the markets. Okay? So anything can happen. So something like this could happen tomorrow. Right? We don't know what's going to happen. So you got to be aware of that and be ready. Okay? Have your stops in place. That rolls us right into number 2. Know your risk. So as a trader in general, it's essential to know the risk of what you're trading. Have your risk predefined before you even enter the trade. Right? So have something like a hard stop, or even a trailing stop or a mental stop. But know where you're going to get out if it goes against you. If you can keep your risk in check, it's possible to lose more than you win and still be a profitable trader. All right, so check this out. So let's dig into this. So you could lose 70% of the time. You could win 30% of the time and still be profitable. All right? Now, how's this possible? Well, guess what? If you have a risk-reward ratio that's in your favor, like a 1 to 3, you can still be profitable. Okay? So you could be a really bad trader and still make money. So let's say we took 70 trades with an average of a $100 loss. Right? That's a loss of $7,000. But we had 30 trades with an average of $300 profit. That's profit of $9,000, netting us $2,000 profit. Okay? Number 3, know what you're trading. So every tradable security seems to have its own personality. As a day trader, you can gain somewhat of an advantage by becoming vastly familiar with 1 or 2 or maybe a handful of securities. Really get to know how they move. So learn how they're affected by other aspects of the market. How do they react to movements in, say, the SPY, the SPY, S&P ETF? How do they react to news or tweets? Learn how they move off the open or into the close. Like, how do they act if they gap up or gap down? Do they fill those gaps, or do they gap and go? Or even earnings. How do they react off of earnings? Do we have a good earnings report and gap and go, or do they have a good earnings report and gap and crash? So every stock or even futures contract or commodity, they all have their own personalities, and they all have their own ways that they move. So if you can really watch them closely and become vastly familiar with the action in those charts, you can learn to kind of know what's going to happen next. You get a feel for the movement in those things. All right, so number 4, you got to know your setups. Just like this batter here, he's looking for a fastball. All right. So a good day trader will have a handful of go-to setups in his or her toolbox. They will know them like the back of their hand. And when the setup appears, they're confident in the probability of that setup working in their favor. All right, they know their edge. They know their risk for the trade, and then they jump all over it, like that cleanup hitter sitting dead red on a fastball with a 3-0 count. And they're going to try to hit it out of the park when they see their setup, because they're confident, because they've seen this condition play out over and over and over again. Okay, and if it doesn't work out, they have the risk, right? They have the risk defined. So they know that if it doesn't work out, they know where they're going to get out. And then they move on to the next trade. Number 5, know your environment. Right, so we got the picture of the beach here with the signs that say, hey, enter the water at your own risk. Right, there's risk of shark attack. So there are times when day trading seems easy, right? Everything's working and you're making money and everything's good. And then there's times when it seems like nothing works and the charts just kind of chop around out of nowhere. And you're thinking, what the heck's going on? So this is due likely to volatility contraction or some type of consolidation. You need to be aware of it. So that chop and volatility contraction is likely due to the higher time frames hitting a support or resistance area. And you need to zoom out to something larger like a 4-hour chart or a daily chart or even a weekly chart. Be aware of those zones where the intraday action could likely begin to get choppy and difficult to trade. Right? So it's very good for day traders that trade on like a 5-minute or a 1-minute to also have up, a daily chart or a 4-hour chart and be aware of those support resistance zones on the higher time frames. All right. And sometimes it's best to just walk away, come back another day. If things aren't working, if it's looking really choppy and you just don't have any edge in the market, just walk away. Go do something else. Go to that shark-infested beach. All right. So what are the takeaways? Number 1, anything can happen. All right, we could wake up tomorrow and the market could be down, Dow could be down 1,000 points. You don't know. So you have to have your stops in place and know what to do if something like that happens. Number 2, know your risk. All right, so have those stops in place. Know what you can handle. Don't take on more than you can handle. Number 3, know what you're trading. Be vastly familiar with what you trade every day. Right? Number 4, know your setups. When you see those setups, you got to be able to recognize that that's your setup and you got to jump all over it. Number 5, know your environment. So you got to know and zoom out to the higher time frames and know when the chart is coming into support and resistance zones and it's likely going to get choppy, right? Okay, so that's it for this video lesson, and we'll see you in the next one.